the market. It started actually with NVIDIA's conference call, and it shouldn't have, which is that when we now see any weak numbers, we sell the semis and we sell tech. I have Caterpillar on tonight. Caterpillar actually holds up better than the semis. I saw NVIDIA, I saw Broadcom, which reports tonight, focused on other things. But no, when you see it on the ticker in the morning and you see that it just trades down every piece of weak news, you realize that it's become memed. It's almost memed. It's stocks like GameStop right now. Jeez, that's undeserving. Right. It's a real company, $1 trillion company.
Well, you were on air when we got word from the company.
Yeah, that was me.
Yep.
I mean, it was me. I said that last night to my wife. I said, hey, I broke this big story. I said, no, they called you. You went on air, and you said there was no speed. I said, will you give me a break? This is like something. Yes, I want people at home to know that what happens is that the company issues a release. Yeah. You get it first, and you come on air. Scott Wapner's show, Scott and Mike had me on. And what I just think that happened here is that there is a sense that as aggressive as this Justice Department may be, maybe they're not that aggressive. And I do think that one of the things that I don't want to lump Justice Department in with a lot of other things we're hearing about the Harris transition from Biden, but there is a sense of more pro-business. I think justice cannot be influenced by that. But you come back and you listen to Mark Cuban this morning, and you start seeing speeches given in New Hampshire that indicate that, wait a second, maybe we're a little less tough on business and rich people than Biden. And you start saying to yourself, well, I don't know. Everything seems to be a little more pro-business from this administration right now.
Broadcom and all the other chip choppiness out there. Let's bring in Ben Reitzes, the head of technology research at Melius Research. Ben, this is a scenario where NVIDIA is rightfully, in many people's minds, the stock that is driving the entire market right now. How scared or optimistic should we be about the chip sector?
Hey, Dom. Well, look, seasonally, this is a time where a lot of folks digest big first half expectations. And the chip stocks, just like actually last year, ran ahead of a lot of AI hype. And now it's time to deliver. And we're seeing some cracks in terms of PC demand and a few of maybe the applications that investors wanted to see take off, such as Microsoft Copilot and a few other things, be a little slower on the uptake. But I feel like we are in the early innings still of this, and feel that the sector will find its legs and get going as a lot more applications come out next year.
Okay, so let's just say for argument's sake, that you're right, and this is a longer-term story that's playing out that we're in the early innings for. How much volatility could we expect for people playing this particular trade? Are we going to say, hey, it's a long-term uptrend, but you can see a 30% drawdown, hypothetically?
Well, 30, I don't know if anybody's smart enough to think that something that draconian will happen, but I do think there'll be a ton of volatility. It's a little bit like the 90s. We have a paradigm shift. There's a lot of learning on the fly. I think it's a lot like the 90s, where this is a new market and people are figuring things out. There's a lot of new technologies out there. However, I do think we're in a multi-year shift where market cap is shifting towards semis and even some of the old hardware names. And I don't think that's going to stop. However, at times like this, where there's just a few pockets of air, maybe you would say, folks get a little worried. But I think long term, we're on a freight train. And I would be buyers on dips of the leaders like NVIDIA and Broadcom.
I mean, that said, as you know, and as you're talking about, a lot of the community is questioning whether this year or next year could be the peak investment year on AI, as some of those returns, I don't want to say that they don't play out, but they have to think about whether it's enough to justify the massive spend, if it moves the needle enough, or if there's, smaller ways of kind of investing in the technology. So for Broadcom tonight, Ben, what's at stake? What do you want to hear from them one way or the other?
Well, I think people will be laser focused on the AI revenue. Last quarter, it was about $3.1 billion. We want to see that the company has a lot of momentum there, not only in the custom silicon, but in the AI networking space. And they last said that it would be 11 billion plus. And if that goes towards 12 billion, even 12 billion plus, we think investors can be happy. And the other thing we'd like to do is see some upside in AI and not have to cut other numbers, such as more in the slower growing parts of their more traditional business. So Broadcom, though, seems to be executing very well. And they also have the VMware acquisition where they're executing. And Hock-Tan does a really good job over there. So, we feel like this is one that should be bought on dips because they're a long-term winner.
Hey, everyone. Welcome back to the channel. Today, we're diving into the tech world to talk about something that's been on a lot of investors' minds lately: the recent weakness in NVIDIA and Broadcom stocks, and what's going on in the chip sector in general. Why are these once high-flying companies struggling right now? Let's break it down. To understand the current weakness, we need to first acknowledge how these companies got here. NVIDIA and Broadcom are two giants in the semiconductor industry. NVIDIA, as many of you know, is famous for its powerful graphics cards that drive everything from gaming to AI to data centers. Broadcom, on the other hand, has a slightly different focus: manufacturing components for networking, broadband, and enterprise software, but it's still a big player in the chip space. Both stocks soared during the pandemic. With the rise in demand for cloud computing, gaming, artificial intelligence, and 5G, these companies were in the perfect spot to capitalize. But what goes up must come down. At least, a little. So, why the recent dip? First, let's talk about NVIDIA. Even though the company remains dominant in the GPU market, a few factors are weighing on the stock. One of the biggest: valuation. After a massive run-up, the stock became quite expensive. Investors started to get nervous that NVIDIA's valuation was getting ahead of its actual earnings potential. Another factor is global demand for chips, which is starting to normalize. During the pandemic, there was an unprecedented surge in demand for semiconductors. Now, as the world moves past that phase, demand has slowed down, and inventories are piling up, especially for consumer electronics like PCs and gaming consoles. That's hitting NVIDIA hard. For Broadcom, the story is similar but with a slightly different twist. Broadcom's reliance on large enterprise deals, particularly in software and networking, has made it vulnerable to macroeconomic headwinds. Companies are cutting back on tech spending in the face of rising interest rates and fears of a potential recession. This has made investors more cautious about growth prospects for companies like Broadcom that rely heavily on enterprise demand. And it's not just these two companies. The entire chip sector is seeing some weakness. The supply chain issues we've been hearing about for the last couple of years are still a problem. There are delays in manufacturing and a bottleneck in getting products to market. As a result, chip companies are finding it difficult to match their output with demand. Add to that the fact that governments are scrutinizing semiconductor exports more closely, especially with tensions between the US and China. The US is restricting the sale of advanced chips to China, which has created uncertainty for companies like NVIDIA and Broadcom, who do a significant amount of business in that region. Lastly, we can't ignore competition. More players are entering the chip race, from traditional companies like Intel to newer entrants focused on specific applications like AI. This competition is heating up and could cut into the market share of big names like NVIDIA and Broadcom. Now, does this mean the end for NVIDIA, Broadcom, or the semiconductor sector? Absolutely not. While there's definitely short-term weakness, the long-term demand for semiconductors is still very strong. Think about industries like AI, electric vehicles, and cloud computing. They all rely heavily on advanced chips. But in the short term, investors may need to be cautious. With economic uncertainty and inventory buildups, it's possible we could see more volatility before things stabilize. All right, folks, that's a quick breakdown of why NVIDIA and Broadcom stocks are struggling and what's happening in the broader chip sector. What do you think? Are these stocks worth buying on the dip, or is there more pain ahead? Let me know in the comments below. Thanks for watching, and don't forget to like, subscribe, and hit that notification bell for more tech and finance content. See you next time.